Hello, here are my counts for gold. So the bullish scenario, the first one is ABC in a W, WXY in a wave X, AB, ABC in a wave 1, 2, 3, 4, 5, ending diagonal in a wave C, to finish wave Y, to finish a double zigzag like this. Afterwards we are moving up. The alternative to this is counting this as an ABCW, and then A instead of wave X, and then you have the AB 1, 2, 3, 4, 5 in a wave B here, moving up in a wave C to finish wave X, and afterwards you're looking for a finishing wave Y in either a flat or a triangle like this, and you move up. So the two other scenarios are both bearish, and this, the most bearish scenario I've written here, is counting this as a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 4, 5, and so on. Just stacking 1, 2s, looking for way lower prices. And then you have the even more bearish than the most bearish scenario, which is this. ABC in a 1, 2, 3, 4, 5, leading diagonal, and then you move up, and then you are looking for extremely low prices. So if we take a look at the probabilities for these, because I am interested in looking for continuation of the bullish trend sooner or later. So this, a leading diagonal, is a very low probability structure in itself, and also on this time frame going by the Elliott wave, so like the intermediate and above time frame for Elliott waves, it's quite unusual to have a leading diagonal, a contracting leading diagonal like this, to start a new bearish trend. It is more common with an expanding diagonal, even those are very rare, so they do occur in stocks and these kind of markets a bit more frequently when you are at the top. So this has a very low probability for me, but it exists and it's an option. So I am looking for this to invalidate. So if we move up here, we are touching this line, which is parallel with this, meaning that this diagonal is no longer a contracting diagonal. So then it is an expanding diagonal, and it doesn't fit well either if it is an expanding diagonal if we move up here. So therefore this is my invalidation for this scenario. But as I mentioned, this has a very low probability in itself. The other scenario is possible, absolutely. So the only issue here is that this move is too big to compare to this move. So you compared the ones with each other, and you don't want to see this long one compared to this long one when it is a lower degree. And you cannot count this as a 1, 2, 3, 4, 5 because you have overlap here with wave 1 and wave 2 of the lower degree. So therefore you are breaking a guideline. You're not breaking any rules, but it's a strong guideline that you shouldn't have that. Therefore it is a higher probability that this is a 1, 2, 1, 2. But as I mentioned, this is too long compared to this. So it's not looking great for this scenario as well. But nonetheless, it exists, and it's just guidelines as I mentioned. And the invalidation for me is taking out this high, because then this would be too big of an ABC, like an expanded flat. It doesn't fit at all. And also if we get here without making new lows, or I mean if we are making new lows and get there, yeah, it's still a low probability wave 2 here at 4543.2. So but this is the invalidation for me for this scenario, and it kind of fits nicely with this, which is also in the range of, here you are basically touching it around I would say 47.68, something like that, and here you have the invalidation at 46.27. So yeah, you want to invalidate both of those scenarios. So basically the other diagonal, wherever that may be when we get here, and also this bearish scenario. And if you do that, then the bears doesn't really have an option left, except for an expanding diagonal, but that need to be like insanely big. And here we took out the low, so that doesn't work either. So yeah, you get the idea. But then if we take a look at the bullish scenarios, so the ABC in a W and ABC here is perfectly fine. This is just dragging out the time a bit more. So here you don't want to hit this line for the expanded flat wave B invalidation I have written at 3668.2, because if you touch this, then this scenario has a very low probability. And if we do, then this scenario have the highest probability. So ABC, W, X, and then AB, ABC 1, 2, 3, 4, 5 in a wave C and a wave Y. And afterwards you are looking for upside. So here I have marked 3 here, but 3 may not be complete as of now, because when you are dealing with a diagonal like this, you don't really want to approach a diagonal before wave 4 is in. But as I did this now, because nothing else really fits that well, you could have one more low, and that could be wave 3. So you move wave 3 over here, and then you have wave 4, and then you have another low in a wave 5. That is entirely possible as well. So you need to be flexible with the count. But nonetheless, the invalidation for this is taking out this without having the 1, 2, 3, 4, 5 move down. If you are moving down in a 1, 2, 3, 4, 5 and then moving up, yeah, of course, this is not the invalidation. But if we move up now, this is the invalidation for this scenario. And we also did not hit this line, which is a low probability for a deep double zigzag correction. And meaning that we did not hit this line, then it's a higher probability for this scenario. So that works well for the bulls. And also I gotta mention that if you are finishing a move like this with an ending contracting diagonal, you expect a very explosive move upwards. So keep that in mind if the market is pumping basically. So yeah, a diagonal is the start of a very, very powerful move. So yeah, beware. So this is what I am currently looking at in gold. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.